Hello and welcome. My name is Tim, trader at the Camp Compound, a company where we show you how we invest so that you can learn how to master the markets. Today we are going to talk about a little bit about yesterday, about the interest decision and the effects of it. We're going to talk about the S&P 500 and the Nasdaq because those two markets show what the rest of the stock market wants to do or gives an approximation. And we're going to talk about some of our positions like AMGN, like GE, like BABA, Nvidia, and SMH if we have the time for it. So let's get right to it. Yesterday was an important day. We had the interest rate decision of plus 0.25%, and the markets reacted. So as you can see here, we are on the S&P 500 on the daily chart, and what we saw is that basically the markets yesterday tried to front run it, thought that there would be a positive spin to it, either a raise and then a pause and then a cut, or a pause and later a cut. But basically Jerome Powell said, nope, not gonna happen. We're going to stay at this level for at least the rest of the year. Whether or not he'll be able to do that, we'll see, but that is definitely not as positive as the markets had anticipated. So that is kind of the fallout that we see today. We have here this rejection. We had a bit of a run today upwards, but we are still clearly moving downwards. As you can see here, this is a decent trend line. It's not perfect, but you can see the trend is to the downside. Also, I would like this all to be the same color. There we go. And this one was just for illustration last time. We do see that there is a clear resistance here that we again failed to break, and now we are moving back down. So there's a good chance that if we do not bounce of this downwards trend line here, then we will go test this one, and then probably here, and then next we will be moving back towards this low right here at 356. So that is kind of what we're currently looking at. At the moment, the momentum is to the downside, meaning that most stocks will probably have a tendency towards the downside. Also, I can hear my cat getting ready to be annoying on the side, so hopefully he won't make too much noise, but just so you know if that comes through. All right, so if we move on towards the Nasdaq, here we kind of see a similar thing, kind of as we predicted in February, at the start of February, or not necessarily a bit more, and the later bit of February, where we started to pull back, came back up, had this W pattern, and were promptly rejected right here. This is a topping tail that still counts as far as I am concerned. We could have a double topping tail even though it's still an inside bar, meaning basically that the market is saying this line you're not gonna cross, probably. We don't quite have like a bearish divergence because this close was below this close. For a bearish divergence, we would have to have a daily close above here with a lower RSI than this one, and that is 73.76. So that is fine for the moment, but the candles are not feeling it. So that was what we're seeing here. If we see proper confirmation, meaning that we close with a candle under this level, under this candle, then there's a good chance of moving back down towards a 296 or 297 kind of, and then go for that triple tap here under or around 290 to 285, and then move further down. It's a lot of and thens after each other. Anyway, if we break there, we will probably finally retest this downwards trend line. Stocks, or tech stocks in particular, have been a bit stronger than the regular economy, like we see in the S&P 500. There's still tech stocks in there, of course, but it's not just the tech sector. So that is interesting. That does mean that the tech sector has relatively farther to fall in order to catch up with the rest of the market. But if we do break this downward trend line, we are still in an overarching bearish pattern, as you can see in the blue lines. So these ones can go pretty much. There we go. Make the chart a bit cleaner. These blue lines are still in a bearish pattern. We could still break out and go all the way back down from, because this was 300 to 80, so if we break down here, that would bring us kind of all the way around here, close to like the 2020 lows and the 2020 or the 2019 resistance support level. So all things considered, if we do have a broader recession, there could definitely be some pain in the future still. For now, these are kind of the levels that we see, and we want to break this trend line properly if we want to come back into a bullish atmosphere. Then we also need to break this previous proper high and hold it as a support for at least 7 trading days. So that is what we're seeing in the market. For now, it does mainly look like a downwards idea. Unfortunately, we just missed Tesla because I wanted to see this gap being filled here around the 202.66 to 203, but it just did not manage to get there properly, so no short there. We will still keep an eye out for it. This can go actually. We'll still keep an eye out for it. If it does manage to bounce back up further, I will keep an eye out to short Tesla. Moving on. Actually, before we move on, why do I do that? Because we have a clear weak RSI. The tech sector is looking a little weak, as is the rest of the market. With heightened interest rates, tech sector is generally hit harder because it's not as strong, because it has a bit more of an innovative, bit more fragile, but just higher risk reward kind of idea feeling to it. Same thing with Tesla. We have a clear big resistance right here. This whole area from 188, 187 to 208. This whole area is a very strong support slash resistance. We have a gap here that we could walk towards because most gaps get filled. So if we get in above 200 and then can short it all the way back down to 145, that would be an amazing trade. There is somewhat of, well, you could see a double top here, which has a very high rejection rate, and you could even see an MA pattern, which goes as follows. We see here one leg down, up, M, smaller retrace, A, all the way back down. I don't know if we actually will get down in this case, of course. Good chance that we'll just get out either here or here where we did the previous time, but this is what we're looking at currently in Tesla. Alright, cool. Let's continue onwards. AMGN, we see something similar, but the other way around. This is not perfect because you have more of a... it's a bit of a broader base, which is not necessarily a problem. Like, it doesn't have to be perfect, but you do see that the W is kind of iffy. And then you could have a WV like this, going like that. AMGN for the rest is holding strong, it's fine. We could see a double tap back to this 225 as we just talked about. Would not be a problem. We could even see like a broader divergence coming up, have that double tap and then continue onwards. Not a problem. AMGN is going pretty much healthily. The position is not in any danger at the moment. Despite the fact that the market is kind of pulling on it, in and of itself, it's still strong enough. General Electric is actually being fairly strong despite everything. It managed to break out of this downwards trend line, but there's still a lot of wick, especially above the $91. So you still see that there's a lot of selling pressure. It's being pulled back into this zone right here, and that is for reasons that we talked about previously as well in earlier videos. This is just a very, very strong resistance, as you can see from all the times it's been rejected ever since 2018 when it broke under, and now we just see that there are just a couple of points. We have a downwards RSI and an upwards price, meaning that there is a bearish divergence, meaning that it's being pulled down. There was this bearish kind of pattern. It's kind of a wedge or a channel that we saw at first as well before, because we got in before this tap up, meaning that there is still a good chance of that breaking down further. So yeah, there's definitely enough still here that the short is still valid, is what I meant to say. Not as eloquent today, but that is fine. So this is still all good for the moment. Baba is doing great. Of course, it gapped up really high today, so a pullback then is not strange. We could still see continued upward movement towards 94.15, for instance, or maybe even this small gap right here, the 102. There's still a huge gap here near the high at 118, but we'll see if we actually make it all the way up there, or if we take our profits a bit sooner, because we are now well in profit. This would be about 40%, which is a bit excessive. It would be nice, but we would probably be saying here the 10 to 20% is perfectly fine, especially when the market is being so volatile. You don't want to swing for the home runs every time, but you want to take your 10%, take your 5% or your 15% and just be happy, move on to the next trade, because the market is very volatile and it can change on a dime, especially with the news of the past months or even the past year. Actually, you want to be on your toes. You want to make sure that you get your winning while it's hot, basically, and then continue onwards. So that is what we're seeing currently. Same thing with Baba. Don't try to hit a home run every time. Don't try to hit a home run every time, but instead just be consistent. And with consistency, you compound in a relaxed manner, and that is how you become a real winner in the markets. Lastly, let's have a quick look at Nvidia and SMH. We will see it another time. Here we basically see a very big cup and handle, possibly, meaning that this is a strong resistance. First of all, we already see that here. If it is, then you have about 160 on the way down. If you have that, that is 80, meaning that a handle could move about, oh, this is a logarithmic scale, of course, could move about here at 180. That is, of course, quite the drop. We also see that there is a big gap here at around 208. That would be about 20% move. It's great. Would be wonderful if we catch that. There is a very clear topping tail right here, and again there is an upwards channel, which is generally speaking, it's a bit iffy, but it's fine. Which is generally also a bearish pattern because it will break down at some point. So there is again a confluence of three. There's a couple of things coming together, meaning that there's about an 80% chance that the market will continue down. So that is kind of how we decide on our trades. If there is a confluence of multiple points and we have a clear target, then we can start opening up our positions, and then we will take a certain percentage. For instance, this is 1.5% off the top of my head, but if we do break up, for instance, here towards the 287, this resistance right here, or maybe a bit higher, we could add another 1.5%. So then you have 3%, a better entry, and still the 80% chance that the market will continue down, that it will retrace. So that is how you create a winning strategy, and that is how you, of course, once you know all the other information that you need in order to make this a success, but that doesn't have to be too hard. As long as you can keep to these rules, you can keep calm, keep cool, and keep compounding. And with that, I wish you a great night or a great day, whatever the time is that you're currently watching. I will see you all in the next one. Bye bye.